Well, there's sound.
A
It's
couple of
just
days in a row we've
quiet.
done this one where I get to talk over the music. Say
Well, it's
love.
there. It's just quiet. We're starting with a little bit of ambiance here on Friday. Not the big.
That's
Not,
okay. All right. And we are live here, and I am speaking. This is Coach Tim, and we're here at Tackle Trading's live daily routine show here on YouTube. And Matt, I've got you. Can you hear me there, brother?
Yeah, I can hear you. Could you guys not hear the sound?
No, not even one little bit. It was not
Really?
coming through computer sound, but that's all right. No big deal. Let's talk about the markets, Matt. There's a lot going on here today. Obviously, the jobs report, you had some weak economic data out of Beijing overnight and Shanghai. The Chinese markets obviously got the entire globe concerned. In Europe, you've got this slowing global growth storyline continuing to permeate the way that we're looking at the globe. First off, what's your reaction to just the overall market price action here today?
It's the continuation of the retracement, and that's all I'm taking this as, Tim. I understand the market's down for the first time week over week, and I think we had one more week where we were down just a little bit in the marketplace. I think it was 0.2% down in one of those weeks, but this is the first week we've really had some degree of pullback. And I'm taking this as an opportunity, to be perfectly honest with you. I think, and I'm excited for that scouting report meeting later on today, Tim, because I think there's going to be some tremendous bullish retracements out there in the marketplace. And some of those short trades that we had on the scouting reports last week are coming into those targets, and it's time to start locking in some profit and to kind of reset the week. So I'm not taking anything that I've seen this week as a bad thing, not in any capacity. We've been waiting for a pullback, and something happens in the market with the market participants. They sit there and they moan and cry about how the market is overextended, and they don't dare buy it because it's overextended. But then when it starts to pull back, they're like, oh my goodness, something crazy is happening. It's like, no. This is normal protocol at this point. Now, if that market breaks 2,700 and starts to show me some volatility to the downside, yeah, we'll reassess that. But at this point, I'm taking this as a standard bullish retracement. The volume on the sell-off is a little concerning. Typically, when you see, and you can see the volume kind of right here, Tim. Typically, when you see these types of pullbacks in the market, you want to see a reduction in the volume. And what we're seeing is a little bit of an increase in that volume. As you can see, 3 of the 5 days in this pullback so far, you have seen an increase over the average, and that is slightly concerning. We have had some major news to kind of impact that, but until this market breaks the support level, and it has not broken a major pivot yet, that major pivot is going to be around 2,700. So until that happens, I'm taking this as a buying opportunity. I'm going to wait. I'm going to be patient. I'm going to wait for that doji, that slowing momentum candle. We have not seen that yet so far. We may see it by the end of today. I'm not sure. I can't predict the future here, but I am going to wait for a little bit of slowing momentum. But there are some tremendous bullish retracements out there in the market.
Big picture of this chart here for a minute and go back to a weekly chart, if you would. And obviously on a Friday, we're kind of looking at everything together and we're looking at the overall big picture of where the market is. I agree. I do like the pullback. First red candle, Matt, in about 6 weeks now on the weekly chart. We haven't seen much selling, What do you see here on the weekly?
You could get fairly concerned with the weekly chart from a macro scale when you're taking into account all of 2018. You could look at this and you could make an argument that this is a head and shoulders type of formation on the weekly chart, and you should be fairly concerned with that. But for me, if you just look at kind of the last little data here, you look at this and you're saying, okay, that's just a little bit of an overextended, needs to come back down in price before we reset it. So the weekly chart, in my estimation, is going to give you a little bit of a misread. If you look at, all of 2018, you could certainly paint a picture, Tim, from a technical perspective that, whoa, that looks like a kiss of death type situation. I'm not there yet. I'm not. Let's see how the market responds to 2,700. Let's see that first.
Bring up the chart OIH, if you would, for just a minute. And we're going to talk about the oil holders. More specifically, even than energy, oil and gas producers are all down here today, some of the biggest losers. If you look at this chart, it's very subtle little doji here, Matt, but we're breaking below a pivot point. And I'm seeing weakness, and I'll give you the names. The biggest losers on the S&P today: Occidental, Noble, Devon, EOG Resources, Apache, Cimarex. I know we're going to be talking oil later in the show and getting into that. But even just here with the oil producers, with this global growth slowdown, Man, U.S. output really high, and they're not able to control supply. What's your take on oil and energy stocks right now?
I'd shy away.
Yeah.
I'd shy away. You know, energy is typically has some positive seasonality here, but we haven't seen it. We didn't see it develop in February, and we didn't see it really kind of develop in March. Excuse me, February, and we haven't really saw it develop in March either. Doesn't mean it's not going to happen. But if you'll remember, Tim, coming into November and December last year, I mean, people were talking about the late stage Santa Claus rally, Christmas rally, all the way from like December 20th. And it's like, no, you're not getting it, right? You don't have enough time to get it. And energy and oil specifically has underperformed the broader markets over the course of the last, month and a half. So I don't think I don't see us getting that seasonality, that positive seasonality. The oil holders here are very weak, right? You see a little bit of a neutrality situation. It is breaking support right now. It's a doji at support. You can get that support right around 16, but I don't know why you would be touching this right now. Not compared to some of the other things in the market. And, Mark has been very, very thorough in his analysis on oil, and I buy into that. Mm-hmm. And it's just something that I'm concerned about. Oil, and when you look at the U.S. production, Tim, the U.S. is now the #1 producing oil country in the world. And they are, and I remember coming into I think one of my predictions into 2018, Tim, was they were going to average 10 million barrels a day by the end of 2018. They hit that in the summer of 2018. They're averaging like 12.5 million barrels a day in production, which is astonishing when you think about it. But that's not going to stop, and the U.S. is not going to stop their shale production.
Well, and we're talking about big name companies here, Matt. ConocoPhillips, COP, sitting on support, almost testing or breaking it. Pioneer now.
Did we lose Tim, or did I get lost?
No, I think we lost Tim. I don't know where. Right. Yeah, I always love it when he freezes like
30,
that.
40, $50 billion company.
He's back.
No,
I'm real fast.
There we go.
Bring up Comcast for a minute, if you would.
Hold on. No, hold on. We can't bring up Comcast. Are you kidding me? Do you not understand what you just did?
I was going to say buy Comcast, by the way, because Comcast actually is in a beautiful pullback. I might even submit it for the scouting report meeting. I'm emotional about that company. But anyway, I froze. I know that. Go ahead and continue.
No. The funniest is not when you freeze. The funniest is when you come out of your freeze. Everything you said is like on 10
Alvin the Chipmunks. You're just like.
So it was great analysis, though, Tim. I got to be honest. It was fantastic analysis. So Anyway, continue.
I'm looking at a lot of breakdowns, Matt. ConocoPhillips sitting on support. PXD, take a look at PXD. This is a $25 billion oil company sitting on support that had a tremendous downtrend for a long time. We're breaking below support here today. I am still going to probably be bullish on the market, moderately, very slightly, ever so subtly bullish on the market because strength elsewhere. But I got to tell you, these oil stocks have got me looking at weakness. OXY breaking below support. It just overall energy is mixed. And it's a little bit holding up better than the oil stocks themselves.
Yeah, it is. I mean, but energy encompasses more than just the oil drillers and the oil service holders. Mm-hmm. But when you're looking at those energy stocks, they're all concerning. They're absolutely. I don't know what you want me to analyze beyond that. No. We're not looking to buy them, and some of them do have shorting potential. But I'll look to have a deeper dive analysis when we do the scouting report meeting.
Yeah. There's some action in the brokers as well. NDAQ is breaking down the NASDAQ itself and also the exchanges, those types of things. I'm seeing some weakness across the board there. Some of the gains on the market, Costco looks great. It had earnings. It's one of the only, green bastions on the heat map here today. In fact, you're talking about a big name, big box, brick and mortar retailer, Matt, that did well, and not a lot of them did in the last few weeks when they've been reporting earnings. Costco earnings, I know you got some numbers that you looked at it as well, but give me a reaction to Costco.
Well, first and foremost, positive gap. I actually don't have the numbers on Costco's earnings very quickly, so if you'll just give me 1 second, I'll give you the numbers. Mm-hmm. All right, ladies and gentlemen, Costco reports second quarter earnings of $2.01 a share versus an estimate of $1.67. That is obviously a very positive earnings per share beat. They came in at $35.4 billion versus $35.7 billion. That is slight miss, but nothing to really be concerned about. Revenue grew 7.3% in year over year. Earnings growth 41.5% increase. 41.5% increase on the earnings per share growth. That is fantastic. About a negative 7% negative reaction on the revenue. Nothing bad there. I'm taking this as a net positive. It's a breakout. It's holding its level at 225. So if you're looking at this from a potential trading perspective, you drop it down into the intraday chart. Really, I'm not seeing anything here from a trading perspective. It would have to break out of the high.
Yeah. Some other interesting gainers on the S&P 500 today. Chipotle Mexican Grill, which was on our scouting report, actually is on a nice pullback and actually holding a green candle, which is not common in the market here today. CMG, if you'll take a peek here, Matt, hitting right on that moving average. 3 red candle pullback pivot right here on this green candle. Probably still need to break the high. 622 up there at 622.49 or so, but holding up strong here on Chipotle.
We really need to do a deep dive on what a pullback is.
3 red candle, pullback, pivot, trigger, but not a percentage. Give me a fib retracement on that.
It's just people use that term way too often. Oh, it's a pullback, it's a buy. It just goes back to the bite the dip mentality, and to me it lacks all technical skill set. Not every 3-day pullback is a bullish retracement. And technicians can disagree with me. Technicians will disagree with everybody, right? Everybody has their own way. But to me, that is not a pullback. To me, that is more of a type of a flag-based pattern, or is forming some type of high base type pattern where you just basically have fade action. There's no pullback there, and because in my opinion there is no pullback there, you can't buy off the pullback. You got to wait for it to break 622.50 if you're gonna trade CMG, in my opinion.
Yeah, I still like the overall upward trend holding moving average. I think it's got to hit. Yeah. One stock that did grab my eye as well here today, Matt, and I haven't traded it in a while. I know we talked about it the other day, is First Solar. And with energy and oil kind of showing me a lot of volatility, I really like this post earnings, kind of fading action back into the rising moving averages here. Nice green candle on the back end of that as well. What's your read on First Solar?
If you're looking to trade First Solar, for me, it's just a matter of where the trigger is. And First Solar, wonderful cover call company, wonderful naked put credit spreads. You can do a lot of different systems on First Solar, but for me, it's just a matter of where do you personally put that trigger? Do you put that trigger above the high of the day? Personally, I wouldn't. I like dropping it down into a 30-minute level to find that level of overhead resistance that you're willing to do, and where I kind of see that, you can kind of see that an old support level over here. Tight consolidation right around that level right there. So for me, I'd put that trigger right above those candles, and so it's somewhere around 52, I would say. And so in terms of the trigger, it's just, and that again, that's just subjective based on where you as a trader see that intraday levels. So when you're trading the retracement, yes, buying above the high is perfectly fine. There's nothing wrong with that. But you also have other intraday levels of resistance that you need to be concerned about. So for me, a trigger above 52 would be legit here. That means you're back above the 20-day moving average and you're breaking intraday resistance levels.
Move on to the Dow Jones Industrial, if you would, the YM contract. And I've got this one ranked top 1 because I think it's got the best defense and also some of the best offense in companies like Boeing right now. I really like the Dow here. And if I'm going to buy this pullback on the market, I'm probably looking at Dow components or large cap S&P components, some of these retracements.
Cisco, Boeing.
Yeah, there's been so many strong ones, Matt. There's only 3 companies up today on the Dow, but it's not like the Dow is selling.
Let's take a look at those 3.
Precipitously. Let's see the top 3 companies up here today. You've got Goldman Sachs, Walgreens Boots, and United Health that are coming off of some low points. Goldman Sachs here more neutral.
Nah, there's nothing to see on Goldman.
Nothing. WBA, Walgreens Boots, recovering from a
absolutely nothing to see with WBA. We booted him off the tackle 25. It's a doji candle in a bearish downtrend. That break on WBA, Tim, on the weekly chart is significant in my opinion. So, excuse me, it wasn't WBA, it was CVS, but very similar analysis on both of those 2.
hmm And then last, and depending on how long this sentence lasts, United Health might go from green to red. It's only up about 0.08% right now, down on the bottom, green candle, but really sitting near the break-even line.
No buy signal there. But investors might look at that as a potential support level where they buy. But if you look at this on this weekly chart on United Health, you got to be concerned here. First and foremost, you broke your major pivots here. You couldn't get back up above your major pivots, and now you're selling on top of that. If you break this level of support, look out for United Health. I would not be buying. I would not be buying the dip here simply because that was the low of, December 24th, our one-day bear market. I'm very concerned about United Health right now.
Still makes makes me smile when I think about the one-day bear market on Christmas Eve. We'll see.
It was a fantastic bear market, though. It was a fantastic bear market.
There is some interesting companies on the Dow, though, as I look across it. I mean, Cisco is down here today 1% on a little bit more of a pullback as the market is coming back, not an official pullback. It needed to come back. Might even need to come back a little bit more as well. Might need another day down. Boeing, though, Matt, I'm getting very excited about Boeing, just needs a trigger confirmation here.
We're going to put that trigger in the scouting report, Jim.
I guarantee it.
Guarantee it.
Yep.
Nike, I'm not going to put that trigger right now. Go become a pro member. See what we do best. But that trigger is going to be in that scouting report because I love this setup on Boeing.
Yeah, me too. It's one that I'm watching like a hawk. Intel, Matt. Intel's a company that we trade a lot and we watch a lot. Obviously,
I like that pullback too.
There's a lot. See, here's the thing. People complain about volatility because they have short-term losses, but what you got to understand about the nature of the market, guys, the market is supposed to go up and down. When it goes up and down, it creates opportunity across different asset classes and different companies.
But based on modern monetary theory, the markets could just go up theoretically. No more down days.
Hold on. Let me light the bong up and see how I feel about that.
No more down days.
Never going to be down. We're just going to sit around, play hacky sack, kumbaya.
Everybody can,
and the market will go up every day.
And it goes up every day, and everybody makes money, and it takes absolutely no skill set or dedication to make money anymore. It's just a fantastic environment. No, obviously, guys, these things are normal. It's about time we get a pullback. We've been asking for a pullback. Now we get a pullback, and we got great trades setting up on Boeing, Pan W. You got great trades on Intel. And Tim, it's not just these three companies. I'm seeing pullback. It's literally the biggest debate we're going to have in the scouting report meeting is which pullback's better.
Yeah.
Right. I mean,
there's a bunch of them.
There's 200 great bullish retracements out there, and we're going to do the deep dive analysis on picking those best ones that we like. But whether or not they confirm or not, I'm loading up to trigger.
Yeah, I've got a long bull watch list. I've got a long bear watch list, and I really like the stock pickers market that we've developed into here. It's a good tradable market. That's my opinion. And I'll tell you, I even like a lot of the neutral stuff. There's theta availability. There's Vega, for straddles that are out in April. Matt, this is a trader's market. It's a beautiful thing.
Market.
It's a beautiful thing. Move on to the NASDAQ, if you would. Let's keep working through our daily routine and talk about NASDAQ. I do want to talk Bitcoin at the end of the show a little bit here as well. The NASDAQ on a sell-off here for 4 days. First red weekly candlestick in about 6 weeks, I believe. And if you're looking at tech, there's so many great companies in tech, but it's kind of a mixed bag in some areas as well. What's your read on the NASDAQ?
Read on NASDAQ, same thing. My read on the S&P 500, you're retracing. Oh, I got something stuck. My wife gave me a healthy shake and it's got a bunch of seeds in it, apparently. I see her drinking coffee. I wish I had my webcam. I could show you this purplish little,
green drink.
No, it's not purple today. It's full of just fruits and stuff.
You know what? It's a good thing you're eating a little healthier.
Thank you, Cody. Thank you. But no, it's just a pullback coming back down. You're coming in between rising 20-day and 50-day moving average. This breakout of 7,200 would have been really hard to trade. I like the pullback coming back down into that 7,000 number. You do have an old old resistance level right here at 7,000. It is a significant number. You are seeing a little bit of slowing momentum here as well, Tim. As yesterday, the candle kind of picked up steam to the downside. Now, obviously, red candle, but your lows of the day are getting a little bit narrower. That's showing you a little bit of slowing momentum here. Obviously, you don't catch falling knives. You don't catch red candles. That's not what you do, because red candles, slowing momentum is not a probable situation. It's a situation where you're like, okay, I'm ready to pull the trigger, but I'm not going to pull that trigger until we start to see that upward movement in price. 7,000 is only support if the market determines it's support in the future. It's support for us right now because it's known as a catalyst, but we haven't seen that confirmed. We would love to see a little bit of slowing momentum. We'd love to see a doji, upward movement in price. That's what you're kind of looking for here. Obviously, we still got another 3 hours to go in the marketplace. The market could do a lot of things between now and then, especially coming into a Friday close. So keep an eye on that. But as of right now, I'm taking the NASDAQ the same way I'm taking the Dow, is the same way I'm taking the RUD, is the same way I'm taking the S&P. This is a standard retracement that we're seeing. It needs to slow down. It needs to confirm. It needs to pivot and confirm. But this is an opportunity for all of us coming into next week.
You know, I'm interested in some of the semiconductors, Matt, as they're pulling back. Micron is up today. Obviously, AMD, AMAT, these stocks we like a lot. We talked about Intel. You look at Micron here pulling back to 50, but it's one of the only candles up today here on the NASDAQ 100. Not tradable.
That's not tradable. That's
No.
That's not a bullish trend. That's more of a neutral trend at this point. But yeah, I mean, bullish engulfing candlestick, I could understand an argument, but no, you got to follow the trend. Number one, it's not follow the candle, it's follow the trend. And as long as the trend stays neutral, Micron's really a great theta type scenario right now in Micron.
Yeah, and some of the weaker companies that are just selling here today, top loser is IQ. It's a Chinese company. JD.com is down as well. I know it's one of our ones we root against now because of the guy, but it is what it is. Lululemon is
here on IQ though.
Yeah, it is a nice retracement, but down 5%. It's top loser today.
Oh, it's aggressive. Don't get me wrong. It's just, I mean, that was a gap down kind of. It's Chinese tech, obviously. They do gap, but yeah, a little retracement coming into the 20-day moving average. That might be a watch list candidate.
You know, and I saw this yesterday as well, and so many of these Chinese companies are showing me weakness. Biogen in biotechnology showing me some weakness as well. Bring up FXI for a minute. And I do want to talk about China, because we referenced it earlier when we were talking about the S&P 500, Matt. Exports were down year over year 20%. Chinese companies sold off aggressively overnight on those indexes, and that's why the market came in with such a negative posture. The jobs report propelled us down. Is there something bigger at work here in China than just the trade deal?
Well, yeah, I mean, slowing growth. How many times do we need to say it? Europe and China are the two biggest concerns for the global economy right now. And in December of 2018, January of 2019, February 2019, with the PMI reports coming out of China, which are manufacturing reports, you had recessionary indicators. China has cut their GDP by 10% over the course of the last month as well. And then today we get a report that China has a decrease year over year in February exports by over 20%, Tim. China is a net exporter, right? And when we were in the pre-production show, you said it best. You're like, China's got to sell stuff.
Yeah,
that's what they have to do. And you had a 20% decrease in year over year, and what that means is comparing last February to this February in February exports. That is a very, very, very concerning number from the Chinese. And Tim, we're seeing this across the board with the Chinese economic data, not necessarily the stocks, independent stocks, because a lot of those stocks are in bullish retracements that are tradable. But from an economic perspective, you got to be very concerned about China right now. In terms of my global, if I had a global heat map of Matt's concern, okay, Europe would be one.
Purple drink would be on there.
Purple drink. Europe would be one, and China would be two. Those two of my biggest concerns.
Europe potentially, obviously bringing down their, I agree, by the way. I think that Europe coming down to where they're at a 1% growth rate, obviously that's a concern. If they end up going into a recession, there are indicators that could happen, not to obviously happen yet.
That 1% is what they forecast.
I know.
Okay, so let me be very clear on here. They don't know how to forecast.
Yeah.
So we see these. We saw it across the board this week with those central banks. All of them downgraded. All of them went dovish. And isn't that what we said last week, Tim? Isn't that literally what I said? There's nothing to see here. They're not going to raise rates. They're all going to go dovish, and that's exactly what transpired here. And they're all lowering their expected GDP. The central bank's forecast on GDP are about as accurate as the EIA numbers we get on a weekly basis in oil. So when the ECB comes back out and says, "Oh, we're gonna lower our forecasted projection down to 1%," that does not mean they're going to grow at 1%. Germany just last month barely escaped recessionary data by literally 0.1%, or they would have been in a recessionary environment in Germany. So I'm very concerned about Europe, a little bit concerned about China. I do think a Chinese trade deal would help the Chinese economy, though. But those are the two concerns I have.
I also have concerns about emerging markets, Matt. EEM is a little different than FXI. I know they kind of just get lumped in there together. And I know that China is still an emerging market. But I saw, some news out of Argentina overnight, and still Turkey. The Turkish lira is literally a race to the bottom right now. That's a lot of it on the backs of dollar strength. But you do have storylines developing that are, and you've used the word many times, I agree with it, concerning. And I'm still bullish slightly on the market based on the pullback. I've been waiting for the pullback, but realize, guys, a pullback is there for a reason. There is something happening here that's a little bit different. We talked about it all month. Come on, there was no catalyst to drive the market higher until we had a little bit of a correction, Matt. Now new money can come in if they want to buy this dip. So it's going to be an interesting week.
You don't need a catalyst to buy a dip.
Nope.
You need a catalyst to break out of a 2-week high base. There's a big difference in those two patterns. So at this point, Tim, I mean, let me be very clear. I expect a recession to happen within the next 18 months. I do. I believe that will impact us in the U.S. Now, whether or not the global recession actually triggers a recession in the U.S., we're going to have to wait to see that data. But I do see global recessionary data, especially over the next 18 months. The central banks would not be going dovish unless they were thinking recessionary data as well. That's number one. Number two, that doesn't mean my short-term swing trades off this bullish retracement are not going to work out greatly. Okay. Yeah. You're talking two completely different things. You're talking short-term analysis versus long-term analysis, right? In the short-term analysis, you got to focus on the technical conditions. You got to focus on price action. Yes, we can get overwhelmed by economic data. No doubt about that. But in short-term, you got to look at short-term price action, trend, pattern, support, resistance. You got to believe in the efficient market where that everything that you know in the market is embedded in the price action, and you got to follow that price action. So regardless of what I see in Europe, regardless of what I see in China, regardless of what I see in Japan, and regardless of what I see with the central banks, I'm going to trust my eyes first and foremost from a short-term trading perspective. I am prepared for a global meltdown if it does transpire, right? That's long-term analysis. So if you're asking me the question, hey, Matt, if I'm a long-term value investor, what should I do? How many times have I said in the last month and a half that you should be very, very happy to lock in profit on those long-term value stocks? That's number one. Number two, if you were to ask me, Matt, should my retirement accounts have some degree of protection? You are foolish if you don't have some degree of protection in your long-term retirement accounts. But from a short-term trading perspective, I'm going to trust my eyes. And what I see right now is a bullish retracement that is forming that I'm going to wait for confirmation on, no doubt about that. But I'm going to load up and I'm going to treat this as it should be, a trading opportunity.
Not only that, I think there's a lesson here today that you let the data speak for itself. There's no question about it. I'll give you an example. Bring up RTY while we're talking about this because I want to hit the small caps and then the dollar. RTY real quick, deeper pullback, obviously, but that's just mostly through the week. Actually, less percentage down here today. Small caps, they've got more volatility. Yeah, slowing down. I actually like a potential upside here in some of the small caps, but move on to the dollar while I set up the jobs report conversation. And I'll give you an example of what Matt just talked about. You have to trust what you're reading and what you're seeing, not the headline. The headline, when I read it this morning, Matt, I assumed the jobs report was terrible. I went and looked at it and it was mixed. I'm not saying it was good, but it was mixed at best.
It was negative. It was negative.
Yeah.
But go ahead, finish your point.
Well, no, I mean, you go on to Twitter or you go on to these news sources and you just read the headline and you don't dig into the actual
Oh
numbers.
man, they're
You
Chicken
can,
Little looking for clickbait.
that's right. Yeah.
That's why people should not do that. I did the same thing, Tim. The exact same thing you did this morning. I went to Twitter and I looked at all the headlines. And I'm like, man, this market must be. And now, obviously, I know better, but I was kind of thinking, wow, what's the dollar doing? What's the market doing? Everything's down. Everything's getting crushed. But you got to look beyond that, correct? You can't
Yeah.
just look at the headline number, right?
Yeah. I'll give you a couple of things that grab my eye. Average hourly earnings were up 3.4% year over year.
That's a
Okay.
good number.
That's a really good number. Payrolls were not good. We only increased by about 20,000 payrolls, but you had some reporting issues with the government shutdown as well, instead of like 190 or whatever was projected. So that number wasn't good. The actual unemployment rate was down 0.1%, but we know that fades. And that also doesn't include people who are dissatisfied with their job or not currently looking for work. So the real unemployment rate is probably like 7.5%, by the way. But that's
I
economics.
think it's a lot higher than that, but I mean that we could debate that is what I'm saying.
Yeah.
But it wasn't just the average hourly earnings up 3.4% year over year. It actually beat on the month over month too, a 0.4% increase on that. The participation rate came in line. Average hourly work week came in line. And if you look at kind of the in-depth analysis, you had a revision to the upside in December. You had a revision to the upside in January, and you had and so you had revisions that actually showed an upward movement in January and December. And if you take into account the 3-month average, Tim, we're growing at about 188,000 jobs every single month. So the headline number at 20,000 new jobs is abysmal. That is a pathetic number. But when you look at the actual raw data behind it, it's not nearly as bad as you think of that headline. And so headlines, clickbaits, don't feed the trolls, guys. Don't click on the bait.
Mm-hmm. Next week, there is some real key data as well, which could be market catalyst and drivers. I'm sure we're going to talk about it, Matt.
Can I say one last thing to you?
Mm-hmm.
Okay. Other economic reports today. It wasn't just the jobs report that came out today. You had building permits came in above the expectation. It was expected to be 1.29. Actually came in at 1.35 million new building permits, an increase over last month at 1.33. You had housing starts. Expectation was supposed to be 1.19. That came in at 1.23, which was a big increase too. Now those are both positive data on today. I will tell you, year over year, it's a little concerning with building permits year over year, a decrease of 7.8%. So, and housing starts a decrease of 1.5% year over year. So a little bit of mixed data here as well. But I didn't take the economic data we got today as a net negative. It could be just one data point. Let's wait to see what the revisions happen next month is what I would suggest with the unemployment report.
Yeah. As I think about the calendar and the economics and the earnings season, I mean, it will be economic indicators and news out of China and globally that will drive this market over the next couple of weeks, Matt, which impacts everything we do, obviously, on a day by day and a swing trading, position trading basis. As I look at next week, you've got GDP numbers out of Great Britain. Okay. But then in the US, you've got retail sales, Fed chair testimony. You also have durable goods. There's some important CPI.
It's the inflationary week.
Yeah.
This is how economics goes, guys. The first week of the month, that's unemployment week. The second week of the month, that's inflationary. Okay. The third week of the month, and you kind of start to see a trend. Okay. Well, the Fed's not that, but the third week of the month, we don't really get a lot. We get a little bit of manufacturing data. And then the fourth of the week of the month usually gets some manufacturing data and consumer confidence numbers. Mm-hmm. So next week, yeah, we have inflationary week next week.
I know you're doing the Forex report this weekend, Matt. Is there anything in the currency markets catching your eye right now? I see a few cross pairs setting up nicely. What are you going to be focused on?
Destroying the euro.
Hey, they might destroy themselves. I don't think you need to aid to it at all. The dollar yen cross pairs.
I'm sure I will have I'm sure I will say some fairly critical remarks about Mario Draghi destroying the euro.
Yeah.
I'm very concerned about the euro. very concerned about the euro. All you're seeing here today, this snapback rally, that's not pro-euro business. That's negative dollar business on the economic reports, on the unemployment report. So the dollar is slightly down today, down 30 cents. There's nothing to see here. The only question is, are you going to call a breakout? That's really the only question. And I don't know. I need to do a little bit of a deep dive, but I'm sure I'll be discussing what the central bank said this week, Tim.
Move on to crude oil, and we're going to work through the commodity markets as well. Crude oil is down today 2.5% on a myriad of issues. Obviously, weak jobs numbers, global growth concerns, but a lot of that is just international risk. I mean, China selling and Europe showing weakness. Matt, oil is the biggest global commodity there is. We've been waiting for a break one way or the other. Today's not going to give it to you. Unfortunately, you're still going to be stuck in a range. What's your read on crude? We talk about it every day. Yeah, wouldn't trade it yet, right?
I wouldn't trade directionally yet. I still think it's a great cash flow vehicle right now. I obviously have some concerns long-term about it, but from a short-term perspective, you've had a pretty good cash flow environment over the last month and a half in crude oil. So I think that's how you approach it. And then if we do break out, I don't think I would trade the breakout. I'm very concerned that crude doesn't have the ability to break and run. And I've talked about that in the past. So I'm going to approach crude from a theta perspective. I'm not approaching it from a delta perspective any longer.
We talk about gold and silver and metals as well each and every day. Bring up the gold market. Obviously, dollar down, gold up, but you've got a complex technical pattern. If you're a fundamental buyer of gold, obviously you like the rally. The weekly chart looks better than the daily chart, Matt, but you've got some complexity here in the chart. What's your read on gold?
Short-term traders stay away completely, 100%. It's just, you can't do anything from a short-term perspective. And when I mean short-term, I'm talking swing trading. I'm even talking position trading here. But Tim, if you look at that weekly chart does look good. You have a hammer candle here after the massive sell-off last week that Mark did a great job in the commodity report last week of really kind of detailing why this occurred. You have this hammer type candle. You have a bullish uptrend. Now, if you're looking at an entry here, I want to enter underneath 1300, but you do have a pretty good entry above 1300 here, Tim, on the weekly candle with the high tick, I think at 1301.30. So something above those levels. I can understand, longer term position traders or, the investors coming in and saying, yeah, I like gold above 1300.
The heat map is getting uglier as we go. Cody had a really good point in pre-production. I want to talk about a few companies from our reports last week. As you go through the week, Matt, if you're close to a target on a Friday and you caught a nice run, like take up GT, for example. GT was on a stock report and GEF as well. Cody, come on in here for a minute, young man. So working on a Friday, working in a range here, Matt, maybe your target was like 17.5 even or something like that. If you're at 1765 and you're almost there and you're on a Friday afternoon, how do you approach a situation like that?
It would take me 1 second to right click and sell.
And actually, I believe the target that Frank and I came up with during the scatter report was 18. So it's even 45 cents past that.
18 was first target. That was the previous support level. It's slowing down. You've had good profit in it. It's made its run as a short-term trader. And if you look at this kind of a scenario here, look at it when it broke, rally. Look when it broke, didn't have the legs. Look when it broke, and now it's slowing down. So I don't think this is a stock in good year where you can say, I'm going to trust those breakdowns because the data doesn't really show you. And so you're breaking, you got a good run here. You're slowing down on that candle. We got 3 hours before the market closes. Are you really going to get greedy over a couple cents? Yeah. No, close the trade, and go do something. Go to the movies.
Another example.
A new Marvel movie come out today?
Captain
Marvel, right?
Yep. Go see it.
Go see that. Take your profit, take the wife, take the husband, take the girlfriend, take the boyfriend, take the kids, whoever. Take your profit and go watch Captain Marvel with it.
I'd rather rewatch True Grit for the 100th time than go to another comic book movie. I will tell you that right now.
Yeah, it's so tough right now.
No.
Go get your cowboy hat. Go get your Spurs, buddy. Go get that belt buckle. Come on.
Oh, geez.
I get it. I, for one, enjoy the Marvel movies with my kids.
They're fine. I enjoy them just fine. I'm just
Say one bad word about Captain America and it's fighting words.
uh, really like a little shield. That's what he's.
A little shield.
Say la vie. Don't get me started.
Oh,
Moving on to some other candidates, Matt. I was talking to a student this morning about this, where you have to update your triggers. And one candidate we've been talking about all week was on last week's report was Pan W on a bullish side. So yes, on your profit taking side, you have things that are happening, but even on the updating your triggers side, I mean, now you've come all the way back. And you guys really nailed that one in terms of needing another little bit of price action. I think you said needs doji, and it came back. Now it's sitting on this resting moving average. It's the trader's job to manage that expectation day by day here. Just talk about that for a minute, if you would.
Well, yeah, I mean, guys, you can't just look at some magical numbers and say, I have to use those. You have to adjust to what the market does, right? And last week we were sitting in here and we all loved Pan W. There's no doubt about that. We all felt like it needed to come back down because of this big red candle, and it needed to come retrace a little bit deeper. You did that, and you're seeing exactly what you want to see if you're looking for a trade. Now, full disclosure here, I made that trade yesterday. Right.
Mm-hmm.
So I already made the trade because it did go above my trigger, which
popped yesterday. Came back.
So it did. I think I was the last one to buy yesterday because literally I bought, it came right back down. But that's going to happen if you're going to aggressively enter in above the previous day high. And so, but I love what I'm seeing here. I absolutely love what I'm seeing here. I love the fact that it's slowing down. Yeah. Do I wish it would have, triggered above the high and then triggered above 240 and then in 2 days goes to 270? Yes, that would be amazing. But that's not trading. That's not realistic. This is realistic. This is what happens. It comes down, it slows down. The day traders take over a little bit. It waits to break out. It forms some really good intraday resistance levels. And so when you're looking at this, and I guarantee you, Pan W is going to be on the report this week. I guarantee you it will. There's no way it won't. There is no way Pan W is not going to be on that options report. The only question is, in updating the triggers, do you buy above yesterday's high? Do you wait for it to break 240? That's really the only debate that we need to have on Pan W is, do you buy at 238, at 238.50, or do you buy at 240? That's the only debate, and we'll have that debate. But in terms of this right here, you got to love what you're seeing in Pan W right now. And you know what, Tim? If it shakes down and breaks support and stops me out, I don't care. I would make that trade 1,000 times every time I see that trigger, because probability is not about being right on one trade. And that's what everybody needs to understand. Probability is about over time. It's not every time. And that's the fault of new traders who don't understand trading, is that they always think that in terms of one trade. No, probability is about 1,000 trades over a year of data. It's not over one trade this week. I mean, my God, it just, I can't be more clear than that.
Yeah. One group of stocks that I find to be very fascinating right now, we track them, we watch them all the time, Matt, are the big name techs on the FANGs. And did you see the thing we were talking about it before, where Elizabeth Warren called to break up Amazon, Google, and Facebook?
Oh, well, God bless her heart.
Do you think there's any risk to the companies there? I can't even say it with a straight face.
I'm just going to say God bless Elizabeth. That's all I'm saying.
You don't think she's going to succeed at breaking up Amazon, Google, and Facebook? Is that
there are certain things I respect about Elizabeth Warren.
Yeah.
Okay? I do believe we live in an environment of corporate socialism. I do believe that. We need to stop bailing out public companies. We need to start bailing out private companies. We need to stop gift wrapping trillions upon trillions of dollars to companies, and we need to do a better job funding small business creation. So I do agree with Elizabeth Warren on that. I agree with Elizabeth Warren on the student loan crisis and student debt in general. I agree with that. But that's about where the buck stops for me with Elizabeth Warren.
Yeah, bring up Amazon real quick. One of the last companies I want to talk about here, and then we're going to go get ready for our reports. I've got concerns.
To answer your question, Tim, no. Amazon's not getting broken up because of Elizabeth Warren. No.
I've been concerned about this company all year. And I love Amazon. I shop on Amazon. I'll probably buy something on Amazon this weekend. I am a consumer with Amazon. I have Amazon Prime. I believe in their future. I believe in their fundamentals. I believe in the growth story. I believe in the leadership.
Yep,
but Matt, you're in a market that's on a pullback. And if the pullback confirms and goes back up, Amazon should be fine. But if this market shows weakness and Amazon breaks support, there's nothing below that thing. Now, I know that it's neutral, but what's your read?
I'm very concerned about Amazon technically here. Whereas the market's forming a bullish retracement, this is something I've seen many times in my career, Tim. The market's forming a bullish retracement. Amazon's not bullish, but because the market's kind of pulling back down, it comes back down into support level. If the market can't confirm that bullish retracement, Tim, Amazon breaks support.
Mm-hmm.
That's extremely concerning for Amazon, because get ready. If that happens, 1400's in sight for Amazon.
Mm-hmm. And then last stock for today's Activision, you argued and we made a decision. I think you basically said, listen, we're not going to change the fundamental view of Activision right now when it's not really been beaten up too badly. It's actually coming back up here today. It's showing relative strength here, Matt. Activision's been a tough covered call this year, but that doesn't change your view of an entire year or cash flowing on something like this. I really love the brand, and I do think that they have leadership in the area.
I don't believe Activision has been a tough cover call this year.
Just the gap down, obviously, the earnings, the volatility, and selling.
You had one gap down, which the covered call would have covered some of that loss. Number one. Two, you absolutely have to call out of the trade on its earnings, and on its earnings, we started seeing it go back up, and it's been in a range between 40 and 45 for the last month. I don't think that's a tough cover call environment. A tough cover call environment is this. That's a tough cover call environment. And so when I made my argument on Activision, I made the decision that I'm not going to change my opinion of the fundamental nature of a company simply because it's had a little bit of a bad news and it's down 8% year to date.
Mm-hmm.
CBS was the easy call to remove.
I got to tell you, I'm excited. I'm excited to talk to the coaches here in a couple hours. I'm excited to hear everybody's viewpoints and look at everything there. Go ahead.
What's your process for the next 2 hours?
Okay, so go bring your screen down for a minute. I'll show you.
Yeah.
So basically, I have my own manual process, and I have quite a few things that I go through. So when I'm building my scouting report list, and this is all just for this report meeting and whatnot, I've got all my watch lists built into things. And I'm tab man. If you were in my office, you would see about 50 tabs open, and I work through them one at a time for specific purposes as part of my routine. But then what I do is I've got like right here, and I haven't rated them yet. I've got all the ETFs, all of the commodities, and all of the markets right here listed out on this left channel. And kind of bring that in a little bit. And then I've got last week's ratings, my last two ratings I had. Then I have the tackle rating from the last week on all of the different products, ETFs, sectors, and everything. And then based on my secondary analysis, individual sector analysis, which I break down one at a time for sector leadership and weakness, I will then backfill and reverse engineer a yard marker rating and picks from there. So it's about, go ahead.
Do you rank the sectors before you scan the sectors, or do you do it after?
I'll only on the weekend. Only on the weekend. And Mark kind of always makes these little snide remarks, which is why I love my older brother. It's fun being a little brother sometimes, Cody. I got to tell you. He says, "Oh, you're doing bottom-up analysis now." And I'll tell you, I do. I actually
hold on, like a good capitalist does, by the way.
Yeah. I do look at individual components before I give a sector ranking. Yeah. So, for example, like the energy sector, I'm probably going to be less bullish on the energy sector than some of the coaches because of the weakness I saw in like ConocoPhillips. Yep. I would almost guarantee it. As I'm looking here, I got to tell you, I love tech right now. I know that my ranking and a lot of my picks I'm going to put out there, and I'm going to try to win that Bird Dog Award here, Marie. I saw your comment earlier. A lot of the picks I'm going to put in there are probably going to be tech. I like a lot of the names in tech right now. I think there's leadership there. I know there's weakness in some, but yeah, Matt, I've got my own process. And I would say on Friday, while I'm trading, and this is the beautiful thing about being a coach at Tackle Trading, is I can do all this while my accounts are open and while I'm running my accounts. And this helps me build my watch list. Really, it's like you really do kill two birds with one stone. You can manage your own portfolio and also help our community and help them get the information that I'm looking at. And then we kind of bring it all together as a coach's team. What's your process, by the way?
It's similar. You and I approach many things similar. I mean, we've been doing this for 14 years now, but I always look at the individual components of the sector before I rank the sector. I always do that, because when you just look at a sector, and let's kind of come in here real quick. Share my screen again. Zoom's just being a little slow today on the sharing. So just give me a second.
Coming from the dungeon. I like it.
Coming from the dungeon today. What that typically means is either one, somebody's in my house cleaning my house, or two, my children have invaded my office. That's usually those two scenarios.
The dungeon's just anywhere that's not the office.
Yeah, the dungeon is where I find a corner in my house where I'm not getting bothered by anybody. It's the dungeon. And in the dungeon, for some reason, my webcam on my laptop does not work. I'm just not technological savvy enough, apparently. But when give me a sector. I don't even care what the sector is, Tim.
Do tech.
Do tech.
Yeah,
well, you're very biased me on tech. You're
healthcare. I think there's mixed stocks in healthcare.
So here, if I'm just looking at the sector on healthcare, and we had a bullish rating last week, it to me, if I'm just looking at the sector, and they might line up, but if I'm just looking at the sector, I would have to move that sector down into about a negative 45-yard marker. For me, if I'm just looking at the sector, and a lot of that is not just the pullback here, Tim. This pullback is far exceeding what is happening in the market. Number one. Number two, you have broken major intermediate support levels. You're underneath your 200-day moving average, your 20-day moving average, your 50-day moving average. You have momentum to the downside and increasing volume. And even before this came out, Tim, I was concerned about healthcare because of what was happening on the Hill. So if I just look at the sector, then I'm going to be like, well, yeah, give me a yard mark in the negative 40 to negative, 45 area. But if I come here and I say, okay, let me look at all of the healthcare stocks, right? And let me look at just your plus mid cap stocks, and let me look at just stocks that are over $10, right? So I'm trying to weed out the nonsense. Okay?
Yeah, like the GEs, like $7 stock. Yeah,
to weed out the GEs. And then I go through these one by one, and I try to get a better picture of the sector here, because healthcare might be the entire sector is a combination, might be in that neutral to slightly bearish parameters, negative 40, negative 45, you still might have some really, really good opportunities, Tim. A lot of that might mean, like, take a stock like ABBV here, down on the week, bearish downtrend. But yeah, are we really seeing ABBV is going to guarantee to break a major level of support this week? So that certainly could hold. Number two, looking at Agilent here, you got a bullish retracement there. You got a bullish retracement. Now it has to give me a doji and some action there. You look at Abbott Labs. Abbott Labs, my God, that is a beautiful trend with a beautiful pullback that simply needs to confirm.
Healthcare is the perfect example of my opinion on the market right now. It's a stock picker's market.
ACAD, bullish retracement. So yeah, you got your concerns like ABMMD, but when I'm looking at the sector itself, look at AGIO. That is a beautiful retracement. It's a beautiful retracement. You look at you look at that. You're not looking to trade ALGN here because of what happened, but you're now sitting on a 50-day moving average, which will give it some support. So even though you look at this sector and you say, "Ooh, I'm a little concerned about that sector," when you break down the individual components, it doesn't really give you that, chicken little run for the hill mentality.
Yeah. Yeah, yeah. I'm telling you, even like Lilly versus United Health. Lilly is on a beautiful bullish pullback, and we've had it on our watch list for a long time. United Health on weak news and really, really negative news about how they want to regulate those types of companies could break down. And I loved United Health even a month ago,
But
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 that news changed it.
that's more evidence to my argument, though,
Yeah.
right? Because you look at United Health, and no, you're not looking to trade United Health and buy United Health right now.
No.
But at the same time, you could paint out scenarios where United Health holds support and does price appreciation next week,
Mm-hmm.
right?
Yeah.
Then you take Lilly here, beautiful trend, forming a little bit of a bullish retracement, finding support right here. If you look at on the daily chart, break it down to a 30-minute chart, you got really good support right here at about 125. Really good.
Cody, I want to bring you in on this here because you know our process as well. We talk every day when we're doing our halftime prep, and you also attend those meetings. What have you learned as a coach, being able to kind of be a fly on the wall and attend those meetings and watch the way that the veteran coaches go through their process?
Well, it's definitely been a learning experience because I went from, like you said, being a fly on the wall to hearing about the past 5 or 6 meetings I've actually been able to contribute and put a couple picks in. And it really comes down to, starting with where to scan and then working through saying, okay, what pattern is each coach seeing? And they're all based off technicals because we're looking at what trades that we're going to have in the next week. And then we'll say, okay, well, I mean, you put that one on, but this one's a similar company. What's its pattern look like? And like, okay, well, like that setup, but this other one looks better. Let's go ahead and throw that one out there and put this one on instead. And just being able to do that to where there's always setups out there and there's always things that could be better depending on what you're seeing.
Mm-hmm.
And as soon as you decide that you do like the pattern, it's a matter of just running through the set method and then executing.
I love it. I'm very happy, Matt, that you brought up Bitcoin.
Well, you said,
as I was finishing my statement, I see Bitcoin on the screen. I'm like, how am I going to talk technical?
I was gonna give it to you, bro. You said it very earlier today. You said, and I want to talk.
If you didn't know this product, if you didn't have a history with it, and it was just a chart on the chart, rotating trend, higher high, higher low, about to break out of 4K.
I would call for a breakout of 4,000 buy.
Yeah, absolutely.
If I erased the name and just looked at the trend and pattern, is what you should do as a trader. You would call for a breakout of 4,000.
No emotion, brother. Maybe we need to meditate on this. Take a walk, talk about cryptos.
Still not doing
it. Oh, say la vie. All right.
Still not doing it.
Oh man, I had to tell you, halftime crew, go out there and review the information on tackle trading. There was a wonderful recording from last night's Cash Flow Club. I only got through about half of it this morning. Noah did a fantastic job. I love the way that those events really come together, Matt. And talking about bull put spreads on these pullbacks. With the market on a pullback, some of these credit theta trades in an environment like this does make a lot of sense to me. If you are a pro member of Tackle Trading, go and review the recording this afternoon. If not, go sign up for a pro membership. In the chat in YouTube, each and every time we do this, Cody will put a link in that will give you a 15-day trial of our pro membership for free to test it out and see how it works and whatnot. Matt, any final thoughts here?
All I'm going to say is we're the opposite of Elon. We're going to allow you to test drive it. We're going to allow you to see it. You don't have to put up any money. Come see what we're all about over there at Tackle Trading. I think you guys will enjoy it.
Yeah, for sure. All right, guys, getting the game. We're done. Good job, Cody. Good job, Matt. We will see you guys next Monday on the Halftime Crew, and we're going to get your reports out there for pro members.